Hello and welcome to Business Incorporated live on channels television, where we gauge what's playing out with the markets that we track. But here are the stories you should be worth looking at this time. According to a new report from Checkpoint Research, organizations in Nigeria face an average of 3,000 cyber attacks per week in November. South Africa is cashing in on a global energy shuffle after Colombia banned coal exports. The country has wrapped up shipments to Israel. Plus, you see Brent crude has fallen below $60 per barrel, raising concerns for energy producers and exporters worldwide. And it's great to have you join us. Let's get a quick check on what's playing out with metals market now. Looking much better than what we have with risk assets at this point. Spot gold, 0.1% up, $4,311. Now we see platinum, that's the biggest mover with the metals that we track there. That's trading up 1.9%, $1,816 per ounce. I guess on the road to $2,000 per ounce at this point. Palladium, 0.6% up, $1,576. And we see spot silver there taking a pause now with that rally, $63.11 per ounce, 1.2%. That's the biggest drop we have right there with the metals that we track. Let's get a check on the oil market now. We're seeing pressure right there on Brent crude, 1.54% down, $59.61 a barrel, sub 60 right now. We see WTI at this point, the biggest looking farther away from the $60 level, 55.84 a barrel, 1.17% down. So I guess at this point, it's still that range trade. We'll see if we get a bounce for Brent crude, 59.61. If it gets to maybe about $58 per barrel, that's talking about Brent crude. Then we still see geopolitics driving sentiment right there in the market. Let's get a check down what's playing out with other stories now. We see right here, Nigeria has emerged one of the most targeted African nations for cyber attacks, according to a new global threat intelligence report. The findings show organizations in the country face thousands of attempted attacks. That's for the month of November, placing Nigeria near the top of the continent's threat landscape, alongside Angola. Security experts warn that rapidly evolving tactics, including AI-driven exploits, are forcing businesses and government agencies, to strengthen defenses as digital risk escalates right there on the continent. So there you have it. Nigeria, they're second to Angola when it comes to targets by, cyber attackers. So other stories now. South Africa is ramping up its coal exports to Israel after Colombia imposed an export ban, filling a critical supply gap in the global energy market. Traders say the move is boosting South Africa's export revenues while, highlighting the shifting, dynamics of international coal trade. Analysts are watching closely to see how the surge in shipments will affect prices, regional energy security, and market competition. I was seeing East Africa now. The cabinet has approved the creation of an infrastructure fund and a sovereign wealth fund aimed at financing major projects and attracting, private capital to the country. Officials say the move will reduce reliance on public borrowing while boosting the country's long-term economic growth and development prospects there. That's the big news coming from Kenya. All right, right here in Lagos, we see in the spirit of festivity, the Lagos State Ministry of Wealth Creation and Employment, they said they're providing a 2-month training and support to youths in the entertainment sector to support their passion and ensure they grow in their area of specialty. State Commissioner for Wealth Creation and Employment, Mr. Kiemi Ajibotafe, made this known at the unique training program called Eco Studio Culture. He says the state is committed and will partner with those in the private sector by supporting youths in developing their skills and encouraging them to strive for a brighter future.
creating new idea, new concepts to see how we can reach out to our youth, to see how we can empower them in the line of creativity. We have a lot of talent in Lagos State. How do we bridge in that gap to see how we can bring them together and support them in terms of training, and at the same time encourage them to, to push forward that they can become somebody in the future. So we're seeing how we can put all these together in terms of production, creativity, cinematography, DJing, and the rest, to see how we can encourage them to bridge that gap. Some of them, they have this talent, they don't know where to go to, how to, to get support. That's why the government is coming to encourage them to bridge that gap and see how we can support them in terms of finances, having the equipment to themselves, to encourage them become somebody in the future.
All right, definitely. We see Nigeria's economy currently navigating a complex energy landscape marked by, domestic and international pressures. We see the recent decline in diesel prices, juxtaposed against persistent, headline inflation, presents a paradox for businesses and consumers. Simultaneously, the global pivot towards renewable energy poses a structural question for Nigeria's oil-dependent refinery sector. Join me now for this conversation. We have Emir Finish and then Luka Chukwu there. She's joined us via Zoom. Great to have you on the show.
Thank you, Ladi, for having me.
Fantastic. So we see, diesel prices dropping, but when you look at headline inflation, we're not seeing it drop as fast. What would you say is driving sentiment there?
Yes, you are very right that diesel prices is dropping. It has dropped to as low as 919 naira to a liter per liter from 2 years ago when it traded as high as 1,900 naira. And why we're seeing this decline in diesel prices is because currently we're seeing that there is a price war going on between the domestic producers here in the country and importers of crude oil, of diesel products. And due to this price war, we're seeing that prices of diesel has dropped significantly, which is benefiting the consumers here. Another factor we're seeing is the major component that is used to get diesel is crude oil. And we're seeing that crude oil as of today is trading below $60 to a barrel, compared to last year, this same period, when it traded about $74 to a barrel. And because of this, we're seeing that prices of diesel has also reduced. Then another reason is we're seeing that Nigeria also still imports diesel into the country. And a result of this, we use exchange rate. And our exchange rate, compared to last year, has appreciated. This year is currently trading at about 1,490 compared to last year of 1,600 naira to a dollar. And because of this appreciation in the naira, we see that we're using less naira to buy more diesel, and so we have increased diesel supply in the country, which is making prices of diesel come down.
All right, and what are you seeing with the play around, the drive for cleaner energy? We've had, COP, just finished recently. How is that impacting, in your view, refining process there? Is there more need now for more refineries, in the country, in your opinion?
Yes. So very true that we're seeing that there's a shift from fossil fuel to renewable energy. Even in the global space, it's becoming very, very popular. For example, we see that China, the major consumer of fossil fuels such as oil, their economic data came out today, and it showed that their demand for oil has reduced. And currently, we're even seeing that China, they are mass producing renewable energy such as solar panels. And these solar panels, compared to last year, compared to 20 years ago, we've seen that prices has dropped significantly by 80%. And what is even more interesting that we're seeing is that China is even exporting this solar panel. They're even dumping these solar panels in countries. For example, see Pakistan. Pakistan currently uses solar panel. Even when the government even tried to revive their energy sector, because solar panel is a much more cheaper alternative, they relied more on solar panel compared to their energy sector. And then if we're going to bring it into the country, China is also one of our major trading partners. And if they do the same thing that they did in countries like Pakistan, we'll see that refineries here in the country will become redundant.
All right, thank you so much for that update. We'll keep tracking those prices, and hopefully energy prices go much lower, and renewables get cheaper too. Thank you so much for joining us.
Thank you, Larry, for having me.
All right, let's get a check on the markets now. We see for the NGX still trading around 149,328 points, down about 7 basis points. The Johannesburg Stock Exchange, the bigger drop, 0.39%, 112,863. That's for the all-share index in Johannesburg. Let's get a check now on EGX 30, down 0.43%, still trading at highs there, 42,121 points. The Nairobi Stock Exchange closed Monday up 0.20%, I guess trying to reclaim that 180 points level. If we take it on to the UAE now, see it's mixed sentiments. There's 0.32%, Dubai Index up 6,108 points. And the Abu Dhabi Index, 5 basis points down at intraday. Flip over to Saudi Arabia, Tadawul 0.60%, down 10,526 points. The Qatari Index also pressured there, 0.40%. Yesterday, I did talk about the oil market there, sipping into what's playing out right there for these markets there. Most of those energy stocks, dropping, with the price of oil. All right, let's get a check on the U.S. market. We see stock futures, they slipped this morning, as traders are anticipating the new release of November's jobs report. Futures tied to the Dow Jones Industrial Average there is received 0.32% down. S&P futures 0.45% down. We see the tech-heavy Nasdaq there, 25,182 points, 0.64% down. So, definitely at this time yesterday, markets were in the green. That's for the futures, but we're seeing pressure right there with the AI moving away. Most of the investors there are moving away from that AI trade there, and that's what we're seeing, the downturn. All right, let's get a check on Asian markets now. See for Asia, big drops. Nikkei 1.56%. Down to close. The Kospi 2.24% down, tracking what we're seeing play out at Wall Street. But definitely this closed before the futures markets started trading there. Hang Seng Index 1.54% down. Let's take it on to other markets. We see the Nifty 50 not left out. 0.50%, 25,896 points. So that's the color right there. Pressure for this final full trading week of 2025. Let's get a check now what's playing out in Europe. We have Lars Holter with the details. Hello, Lars. How's it looking there? It's mostly red, most markets we track.
Yes, hi Ladi, and we have the same situation here. European markets, all of them in the red as well, but only fractions. We see the FTSE in London down about 0.5%. Most of the others just 1 or 2 tenths of a percent. As for the DAX, also currently underwater by about 0.5%. So that's all after yesterday's gains. Here's the thing, Ladi, that I'm struggling with. Defense stocks, they are really under pressure today. That is companies like Rheinmetall down 4%, Hensoldt or Renk down 3% each. Now, those are obviously not household names, but they're stocks that have gained tremendously in the last couple of years because of the war in Ukraine and all the weapons we're sending there. Now, obviously, they're working on a peace plan, and investors are afraid that this means fewer weapons are needed in future. But not only is that extremely cynical, I think it's really also short-sighted because the military, especially in Europe, is still currently investing massively. That's as Russia, of course, is still a threat and the US is no longer a reliable partner in NATO. So those companies will be busy for quite a while.
All right, let's look at trade now. This year we've seen a lot of change in global trade, and now there's a new report out on German trade. What can you tell us about that?
Well, Ladi, mostly that we're seeing some change in who we're trading with and how much. And maybe the biggest change that we're seeing in these very current trade numbers is that China is no longer in the top 5 of Germany's export partners. That is for the first time in 15 years. Exports to China plummeting 10% this year to 81 billion euros. And that would make that country only the 7th largest buyer of German goods. Now, there are 2 developments behind this trend. One is, of course, the fact that the Chinese domestic market is weakening. That means China is buying less because there's just less demand over there for goods. But there's also another factor. More and more German companies that used to be among the stronger exporters, they're now producing locally in China instead of making their goods here in Germany and then exporting them. Now, that's partially in an effort to keep supply chains short and more reliable, but it's also, of course, in an effort to save on production cost.
So what else does the latest trade report, what does it tell us about Germany?
Well, with regards to China, there is another development that is noteworthy, or rather, it's a non-development because the import of Chinese goods to Germany is actually still quite strong. As a matter of fact, it's even been getting stronger, up a full 7% this year. And looking at the fact that Germany's imports in total are only up 4.4%, we can see that China is actually outperforming other countries when it comes to selling to Germany. And that shows that the whole idea of de-risking from China is not really getting anywhere. We should remember Germany has long had a debate about de-risking from China. That was a term that was coined after the initial idea of a more drastic decoupling from China sounded not only hostile but also economically not feasible. However, de-risking apparently, as we see in these numbers, is also not happening, especially looking at some future technologies, chips mostly, where we are just all still extremely dependent on China, and efforts to change that here are moving along rather slowly.
Right, yeah, I guess one very key word for 2025, tariffs and trade. Thank you so much, Lars Halter, there for the details.
Yes, thank you, Ladi.
All right, let's get a check on what's playing out in the crypto market there. We see risk assets under a lot of pressure at this point, and Bitcoin, Ethereum not left out, 6.41% drop for Ethereum. They're losing the $3,000 mark right there. Bitcoin also struggling, 2.91% down, and the top 100 coins on our coin market cap, most of them, a lot of pressure there. Just a few stable coins showing in the green. Let's look at some of the headlines now. We see British Regulator and Financial Conduct Authority, that's the FCA. They've launched a wide-ranging consultation on a range of proposed rules for the crypto industry today, a day after the government said the industry would be regulated from October 2027. The FCA set out its proposals alongside research that shows that the proportion of UK adults holding crypto has fallen by a third, from 12% to 8%. In the past year. That's what's playing out in the UK. Now we see JP Morgan, they're making a major move into digital finance. The banking giant has launched a tokenized money market fund on Ethereum's blockchain, bringing traditional investment products to the blockchain and expanding access for institutional and retail investors. Analysts say the initiative marks a significant step in bridging conventional finance with the growing world of digital assets. There we see over $584 million in leveraged cryptocurrency positions liquidated in a sudden, market squeeze, overwhelming and hitting investors, betting on price increases. That's most of the long positions right there in the market. Let's bring in Olumide Adesina, our financial market analyst. Hello, Olumide. Yeah, so we're seeing another big liquidation, over $500 million. I guess this time the longs are getting it wrong again.
Yeah, I'm not surprised. This year has turned out bad for crypto assets. When you rank it among major assets, including stocks, commodities, and currencies, the return on crypto has been surprisingly bad. And, that's coming from the backdrop that bookmakers felt that a pro-Bitcoin president in the world's most powerful economy will tranquil in liquidity. But we've seen cascade of liquidation and losses in the space because of three major things. First of all, the meme coin space, the erratic situation of that asset class, scams, rug pulls, and other dark plays in that space had eroded confidence in the risk asset class. Secondly, we also saw the fact that central banks were playing more on gold than Bitcoin, despite the fact that the United States spoke about using Bitcoin as a strategic asset for safety. So I think that has really affected. Then lastly, we're also seeing the fact that despite the fact the US Fed sounds dovish, investors are wary that there are so many assets in that space, and it's really very hard to give a track. So you see Bitcoin red year to date. You see Ethereum also red to date. You're seeing many meme coins down, and also hot coins like XRP, Cardano, Polkadot, and the likes. Privacy coins surprisingly had a good run in last quarter, but you've seen that diluted, and that's pretty much the fact that liquidity is going up. But Ladi, interestingly, if you look at data from Glassnode, the number of Bitcoin holders, long-term Bitcoin holders, have dropped by 1 million because right now we have about 14.3 million Bitcoin long-term holders. When you look at the July rally, you see that we had over 15. So it's really telling you that the long-term holders are taking out. Liquidity is not impressive. The market has not gotten the confidence that we had when President Trump came to power.
So, looking at it, from a historical view, definitely we know November has not been that, it's not been a good month for, crypto assets, and definitely we have festivities coming up, next week. I guess it's a no-brainer. Some investors would like to take out some, money to go have fun. I guess this is expected, right?
Very true, but I think what a lot of market tacticians are worried about, technicians are worried about, is the fact that this year we had the worst liquidation ever in the crypto space. You recall that at some point in October, over 10 billion was wiped out in that we never had that ever in the crypto space ever since historical data has covered such asset class, and that really tells you that we are seeing fear. So I think for the market to bounce, really they have to be a deep correction. So my take is that a downward trend towards the 75 to 68 support level might really bring in buyers. But if that doesn't happen, I think then we might see the asset Bitcoin ranging between the 80,000 support to the 95,000 resistance throughout this month.
So, what are you seeing for Ethereum now? It's lost that $3,000 mark at this point. Where are you seeing a real bounce, for Ethereum, or is the trade just shorting? Is that what most investors should just do right now? Just
Yeah,
short.
I think what's helping Ethereum right now is institutional play. You recall that after it dropped to its low of around the 1,005 in the second quarter, it bounced back interestingly when you saw listed American companies going into it. So I think institutional investors have a key role. I'm more concerned the fact that if it can hold the 2,800 rather than the 3,000, because that mark, if you look at that mark, it corresponds with the moving average, the 200-day moving average. If it breaks below that, then we might be looking at 2,500 or 2,000. However, if looking at the daily chart right now, it shows that the buyers are holding on. So I probably think that it might reclaim the support back the 3,000 support. But going forward to next year, I'm bearish about Ethereum.
Right, and definitely a lot of investors looking out for data. Some data coming out today in the U.S. and also on Friday. Is there anything in that data that could be a catalyst for an upswing in prices?
Definitely, strong economic data from the world's most powerful economy will trigger in liquidity. You know that the US really control the crypto space in terms of players and the participants in terms of quality. So a positive economic data definitely will turn the market green. However, a meltdown in the market might spell trouble for Bitcoin. And as it looks like, I won't be surprised if it breaks below the $80,000 mark.
Wow,
So,
that's definitely a big drop coming from over $120,000. But
yeah.
with all that's playing out, so far, we know how the market loves, narratives. Is there any narrative that you think investors are missing right now when it comes to the crypto space and digital assets?
I think, to be honest, I think it's been an exciting year for the crypto space in terms of ETFs. You look at BlackRock ETFs. At some point, you know Bitcoin hit the record high, book the 126,000 resistance, and bookmakers like Star Chartered were already calling in 150,000 for Bitcoin. I think the problem is that we have too many coins in this space, and there are still a lot of dark actors, criminals, insiders manipulation and rug pulls, and that has also eroded the confidence over long. So I think for the space to get the integrity and right liquidity, I think the regulation should be holistic. We really need to have fewer coins. We also really need to have channels where people can be held accountable, because a lot of people, including Nigerians, have lost their hard-earned money to many suspicions. So that's also affected, because, Ladi, if you look at the space, Bitcoin has done exceptionally well in the last decade. It's still the best performing asset over time. If you had at some point, if you had less than 20,000 naira in 2012 in Bitcoin, you're talking of a billion naira right now. So I think it's really bad to look at the short-term pullback and discount the asset.
Right.
However, the altcoins market really need a lot of regulation. They really need a lot of rejigging. That market has really affected the optimism in the space right now.
Right. I'm wondering why you need over 4 million coins, to do whatever it is, in this market. But, thank you so much. Always great having your perspective. Olumide Additional. Thank you.
Thank you for having me, Ladi. Yeah.
All right, so that's the show today. And, from the sentiment we see right now in this final full trading week of 2025, we see it's risk-off sentiment. Thank you so much for watching Business Incorporated. I'll bring you more updates tomorrow. I'm Ladi Williams. I'm in the team right here at Channels HQ. Bye for now.